Hi, and welcome to the Market Rag for Tuesday, January 1st, 2008. First day of the year here. And they closed off last year just a hair on the negative side. We were down about 0.75% across the board, roughly about 100 Dow points. You'll see the euro took a decent hit at about the same rate, 0.86%, and the bonds still kind of having that choppiness, but up on the last day of the year. Coming over to the sentiment grid here on the broad indexes. As you can see, we have a lot of yellow out here, and we've got the Dow now in the red here, being in the lower 25% of its range on the shortest time frame. I'm kind of giving this market a coin toss at this point, but there are a few things leaning a hair more towards the downside. All your commodities are still looking strong, with the euro starting to fade here, but gold hanging in real tough, and the bonds fading as well. Looking at the chart here of the S&P 500, we've formed these lower highs and higher lows. What that basically means is we're going nowhere. At this point, you'll see our channel lines up here at the upper end and at the lower end, and we're kind of bouncing right around the center here. Again, I'm going to give this just a hair more to the short side than the long side, but basically I think you're at a coin toss. The NASDAQ has about the same highs here, and remember the S&P had quite dramatically lower highs. On the euro here, we had this nice bounce off of our support area, and you'll see it gave a lot of it back yesterday. This is one that's got that extreme high situation still, so a reversal in this area wouldn't be that surprising. Oil still chopping around this all-time high area. And gold getting back up to this overhead resistance. This is one of the stronger looking areas right now. As we look at the sectors, we're losing some of our green, especially here in the consumer staples and the utility area. It's kind of fading off. Energy still staying strong here with oil up at that all-time high. A lot more red though. We still have the consumer discretionary getting beat up pretty good. The financials, which have been on this list for quite a while. And again, a lot of orange up here in the transports and semis. The transports failed to make a new high here and is now headed back south. And again, a real common theme here, a lower high and a higher low. A lot of sideways action. This is the materials. Now here's energy, your strongest group out there. And again, we've now cleared this resistance area. It's had this chance to pull back, and I think a lot of this is just going to depend on what oil does at this point. The financials have worked their way back down here to the support area. And again, here's the consumer discretionary. This is the worst performing area for quite some time, along with financials, and we're right back down to this support area. Coming over to the portfolio, we had one short and then we got triggered into two other shorts on the last trading day of the year. That puts us at about half our money in shorts right now and the other half in cash. All our risk is contained in these three shorts. And looking at the closing R value, we're up, but not by much. I think I'm going to go ahead and leave the orders we've got placed in the market currently and not add too much, and try to survive until next week when the volume hopefully comes back into the picture. I'm going to go ahead and leave my market rating at a 0 and just kind of coast through this week, see what happens, and get started a little better next week. You guys enjoy your evening.